This is a presentation about innocent spouse relief and was created by student attorneys at the South Texas College of Law Houston Low-Income Taxpayer Clinic. We are South Texas College of Law Houston Low-Income Taxpayer Clinic. We provide free legal representation to the low-income community in the Houston metropolitan area. If you need to contact us, our information is listed below. If you filed a joint tax return with your spouse, both of you are liable for the taxes owed that appear in the return and any taxes that the IRS may assess later. This means the IRS can collect the entire tax from either spouse. Susan and Jack file a joint return. The return states the couple owes $10,000. The IRS can seek to collect the entire $10,000 from either Jack or Susan.
What is innocent spouse relief? If your spouse incorrectly reported your income, claimed deductions you did not qualify for, or failed to file the tax returns, you can seek relief from the taxes owed by applying for innocent spouse relief. If an individual is granted innocent spouse relief, then the IRS will not collect some or all of the tax from that individual. For example, Susan and Jack filed a joint return for 2016. Jack has his own auto mechanic business and received cash payments from customers. Jack did not include the cash receipts in the 2016 return. Jack did not tell Susan about the cash he earned in his business. The IRS found out about the cash he received and assessed additional taxes. The IRS can collect from both Susan and Jack. If Susan is granted innocent spouse relief, the IRS will not collect from Susan. There are three types of relief. Traditional innocent spouse relief provides you relief from the taxes already assessed, as well as any additional tax you may owe as a result of your spouse or former spouse failure to report income properly or claim the proper deductions or credits. To qualify for this, you must establish that when you signed the return, you did not know and had no reason to know that there was an understatement of the tax owed. For example, Susan and Jack filed a joint return for 2016. Jack had his own auto mechanic business and received cash payments from customers. Jack did not include the cash receipts in the 2016 return. Jack did not tell Susan about the cash he earned in his business. The IRS found out about the cash he received and assessed additional taxes. Susan can seek relief through traditional innocent spouse relief because she had no knowledge of the income Jack failed to report. The second type of relief is separation of liability relief, which provides for the separate allocation of additional tax owed between you and your former spouse or your current spouse that you're legally separated from or not living with when an item wasn't reported properly on a joint return. You're then responsible for the amount of tax allocated to you. To qualify for this type of relief, you must be divorced, legally separated, widowed, or have not lived together in the same house for at least a year. Continuing our previous example, let's say Susan and Jack get a divorce in 2017. The IRS assesses additional taxes in 2018 for the 2016 tax return. Susan can seek relief based on separation of liability since she is separated from Jack. The third type of relief is equitable relief, which may be applied when you don't qualify for traditional innocent spouse relief or separation of liability relief for something not reported properly on a joint return and generally attributable to your spouse. You may also qualify for equitable relief if the amount of tax reported is correct on your joint return, but the tax you owed as a couple wasn't fully paid with the return. To qualify for equitable relief, the IRS must determine it is unfair to hold you liable for the understated or unpaid tax. In this situation, let's say Susan was a victim of domestic violence, did not have control of her bank accounts, and is currently unable to pay for the liability. Susan can be granted relief if she can show that based on her circumstances, it would be unfair to hold her liable for the taxes owed. These are factors considered when applying for equitable relief. Please consider providing evidence to the IRS of all the factors you meet when applying for innocent spouse relief. Marital status. whether the requesting spouse is no longer married to the non-requesting spouse. Economic hardship, whether the requesting spouse establishes that he or she could not afford to pay for the liability if relief was not granted. Knowledge or reason to know, whether a requesting spouse establishes he or she had no knowledge or reason to know of the item at issue. Compliance with the income tax laws. Requesting spouse establishes that he or she has not failed to file all required tax returns. Legal obligation to pay, whether the requesting spouse has a legal obligation to pay the tax liabilities. Significant benefit, whether the requesting spouse received the benefit from the income that was not reported or the refund that resulted from claiming incorrect deductions and credits. Mental or physical health. Did the requesting spouse have poor physical or mental health when the incident occurred or at the time of the request? Abuse, whether the requesting spouse was a victim of abuse. Abuse comes in many ways, including physical, psychological, sexual, or emotional abuse. One form of abuse that is often overlooked is financial abuse, where one spouse controls all of the couple's finances.
You can apply for innocent spouse relief by filing Form 8857. You can find this form on the IRS's website. There are no fees related to filing this form. You should include evidence that supports as many factors as possible with your application, and the IRS will consider all types of relief when making a determination of whether they will grant you relief. Once you apply for relief, the IRS will have to contact the other spouse and give him the opportunity to intervene. The IRS will not give the other spouse your address. You must apply for traditional innocent spouse relief and separation of liability within 2 years of the time the IRS starts collection activities. And you must apply for equitable relief within 10 years of the time the IRS starts collections. If traditional or equitable relief is granted, the requesting spouse does not have to pay the liability. If separation of liability relief is granted, the requesting spouse only has to pay the portion that the IRS determines that she still owes. If relief is denied, the requesting spouse can seek an appeal of the determination with the IRS or file with the tax court. If the IRS failed to send a final determination letter from the IRS within 6 months from the date you filed a return, you can also file a petition with the tax court.
Different rules apply if you're a resident of a community property state. If you live in Arizona, California, Idaho, Louisiana, Nevada, New Mexico, Texas, Washington, or Wisconsin, please contact an attorney who will be able to provide you with legal advice tailored specifically to this subject. Here are some links that will help you as you begin your innocent spouse application. Thank you for watching this video. This presentation has been prepared by student attorneys at the South Texas College of Law, Houston Low Income Taxpayer Clinic. The information in the presentation is not intended to be legal advice. If you need any help, please contact an attorney or a low-income taxpayer clinic in your area.